In fact, August retail inflation data is out now. Economists were projecting that CPI number to come in the range of 3.5 to 4%. And in fact, this has come out, just according to expectations. In fact, consumer prices have risen 3.65% year on year. Estimated number was 3.47%. As far as IIP number is concerned, that is the India industrial production is concerned for the month of July is 4.8% year on year. Estimated or expected number was 4.6%. Let me repeat the numbers once again. As far as the CPI number is concerned, that has come in at 3.65%. Analysts were expecting that number to come in at 3.4%. However, as far as the IIP number is concerned, that has also risen at 4.8% versus the expected number of 4.6%. And of course, to discuss these numbers further, we'll of course be updating you with more numbers as and when they trickle in. But to discuss these numbers and to discuss India's inflation trajectory, I'm now joined by Saugata, Bhattacharya, independent economist, Madan, Sabnavis, chief economist, Bank of Baroda, Upasna, Bhardwaj, senior economist at Kotak Mahindra Bank, and Jayesh, Mehta at DSP Finance. Let me come to you first, Mr. Saugata Bhattacharya. How do you really see these numbers and any disappointments? Have these numbers come in line with what you were expecting, for instance?
Thank you for having me on your show. No, I mean, these were very much unexpected lines. My own forecast of inflation was 3.5%. It's a little bit higher than that. Probably because of a higher than expected food inflation. IIP, we were expecting 4.7%. It's come in very close to that at 4.8. So, of course, we are waiting to see the internals, particularly the core inflation number, which is the non-food, non-fuel inflation, which we were expecting at about 3.6%. We need to see what that number is, but very much unexpected lines. Food inflation had started to come in much, much lower during the earlier weeks of August. There was some volatility and upward pressures in the last week of August, but otherwise, I mean, everything is on a disinflationary trend. Metals prices of gold and silver, all of those have come down. So I expect that even core inflation is likely to be better. On the IIP front, the mining index is likely to be low because of low rates of growth that we know from the core sector numbers for petroleum, for LNG and coal. But mining, but electricity and the consumer non-durable segments is likely to have pushed the IIP numbers higher. I think the trends are likely to be more or less in line with whatever we have seen. My own inflation numbers forecast for FY25 is about 4.3%, slightly lower than the RBI.
All right, let me come to you, Mr. Bhattacharya, Mr. Sabnavis now. Now, July inflation was the lowest in past many months, and this time as well, the CPI data has pretty much remained within the 4% band. And that reading is quite crucial, one crucial reading that's really coming out, given that it was seen as a big hurdle ahead of RBI in terms of rate cuts. Do share your first thoughts on where India stands as far as its inflation moderation trajectory is concerned.
This moderation which we're talking of was very much on expected lines, and the primary reason is because of the base effect. And that's one of the reasons, that's the main reason as to why we're seeing that inflation is moderating, and we'll probably get a similarly good number for the next month also. If I just take you back to what the RBI's projections of inflation for the second quarter are, it's supposed to be around 4.3%, so we're really crossing 4%. Which means that there is obviously a lot of latent inflation in the economy, something which is going to probably come up more in the third and fourth quarters, more likely in the third quarter. Now, when we are saying that food inflation has cooled down, definitely because of the high base effect, we are seeing inflation coming down. But if you actually go to the market and say, are we paying lower prices for pulses? Are we paying lower prices for vegetables, fruits, eggs, and so on and so forth? The answer is actually no. So I think it's more of a statistical effect, and this is something which the RBI also has been highlighting when they're talking of inflation moderating in the second quarter. So to my mind, while this number is something more or less on expected lines in this region of around 3.5%, 4%, but it's not going to give any major comfort to the Reserve Bank or to the Monetary Policy Committee when they meet for deciding on the repo rate. because what is really important is that even though we know today that the monsoon has been good, Kharif harvest will probably be good, we don't know if the excess monsoons could be affecting any part of the output. So therefore, potential inflation is something which the Monetary Policy Committee would be looking at very carefully before taking any decision. So I think these numbers are benign, but if you look at some of the internals, even if you look at the core sector, I think the personal products is showing a high increase. Telecom prices have also gone up. So I think these are things which are latent, which will probably get a bit magnified as we go ahead.
Absolutely, Mr. Sabnavis, very important point that you make about excess monsoon and how that is going to impact the inflation trajectory going forward. At this point, let me also bring in Upasna Bhardwaj. Upasna, enough comfort coming in through so far as the inflation trajectory is concerned, and what are your projections for the next few months? I mean, it is within the comfort band of 4%, but as Mr. Sabnavis was stating that there could be latent inflation in the economy, and of course the Monetary Policy Committee might not feel comfortable when they meet next. What is your overall assessment, and what are your projections for the next few months?
Yeah, Sumita, I think like Madan said, I would agree that this quarter was supposed to be a very low quarter average inflation. So it's not really surprising. We too were at 3.6%. So the number is there where it was expected. The bigger point here is, of course, that RBI had revised up their second quarter, inflation estimates to 4.4%. And now this number seems to be clearly at least 60 basis lower than what RBI has revised it up from. So, the number which was earlier there of around 3.8% average for second quarter, that is where we will be probably. And that is something which definitely provides room or comfort to RBI. But that's not good enough, because we also need to keep in mind that this is all base effect playing out. It is the second half of the year which is going to be very crucial. And that is where we are looking at an average of 4.5%. So, we do start moving upward in terms of inflation trend in the second half of the year, which is going to be more again trending a little over 4.5%, also one or two readings towards the last quarter. And that is something which RBI will be watchful about. So at this point in time, I don't think, because we are moving ahead towards October policy, anything really changes for RBI despite the downside to their own second quarter inflation estimates.
Right, so Upasna, you stating that, of course, we'll have to wait for a couple of more months before that rate cutting cycle actually begins, by the RBI. And thank you very much for patiently waiting it out, Mr. Jayesh Mehta. Let me take in your comments. Now, Upasna states that second half of the year is going to be crucial, which basically means the next couple of months. And she says that we could be very well bracing for 4.5% CPI number. So upward trend is something that she's projecting, or she's looking at so far as India's inflation trajectory is concerned. Would you agree with that? And what is your overall assessment?
So if you go by RBI's own projection, the third and fourth quarter looks higher. This quarter was expected to be soft. But what has changed in last 1 week globally, and we have been hearing the global slowdown, particularly China, and the impact on that on the crude prices, right? And today we had government officials talking about maybe the retailers can reduce the price. If that happens, then the whole projection changes dramatically. So I think at least at this juncture, where people are talking about recession or soft landing or whatever it is in US, at the same time, with so much of slowdown in China, and also a lot of EV penetration in China, which is actually a good tailwind for us on the crude pricing, which of course also went below 70. So that hopefully, if that trend continues till the policy, I think they will have to at least, if not cut the rate, but at least change the stance. That is withdrawal of accommodation, and that's what I would look forward for. But if you really look at, we have a pretty good tailwind. When we did the projection, everything was much higher, particularly for us, the impacting crude price and of course the food. And I think if both are softening, typically seasonally also second half, the food should soften. And that's what I would expect in the policy to at least change the stance.
Right, right. And let me come to you, Mr. Sabnavis. So how soon do you think the central bank will be bracing itself for a rate cut? When could that come? Because the commentary consistently from the central bank has been that core inflation has come down without really impacting the overall economic growth of the country. So what is your take on when those rate cuts could come in, when that rate cut cycle will begin?
In my mind, if everything goes right, December will be the earliest point of time when the RBI could be thinking of cutting rates. We should remember that RBI has not been focusing just on the number coming down, but also in terms of its durability. And today we have a different situation which is there in the banking sector, where we're talking of a situation where deposits are not rising commensurately with credit. So at this particular point of time, you lower the repo rate, you could be sending certain signals of saying that, look, there could be a slower growth in deposits, there could be a liquidity issue because the kind of a situation where interest rates are lowered, deposits could slow down where the stock market, mutual funds are doing well, credit growth continues to do well. There could also be some kind of exacerbation in terms of the liquidity situation. So I think, to my mind, the RBI would probably wait till December, assess the situation. And as you mentioned, there's no problem on growth right now. We're doing very well on growth, and I think a 7+% growth is something that is more or less assured for the year. So there should not be any hurry until we see the durability in the lower inflation number.
All right. Thank you, Mr. Madan Sabnavis, for your final comments. And thank you, ladies and gentlemen. In fact, Madan Sabnavis, Saugata Bhattacharya, Upasna, Bhardwaj, and Jayesh Mehta for sharing your thoughts on where India's inflation trajectory is concerned and when those rate cuts could finally come in. And as Mr. Sabnavis said, that we'll have to wait very much till December before that rate cut cycle by the RBI begins. But lots of global factors also could possibly impact the inflation trajectory going forward. As Upasna was stating, that we